Are we already in recession? Let's discuss this a little bit. And it's a serious one, so let's get right into it. After months and months of downward turn, markets today had some relief. The markets went slightly up, I think 2 or 3% across the board. And that was primarily driven by the fact that the minutes after the Federal Reserve's meeting today revealed that they are committed to raise the interest rates, but they are not going to go as aggressive on monetary policy as they were intending to. So that gave a little bit of a relief to investors, and that led to the rallying of the markets overall. But this is not something which you should consider as a very good news and start pumping down your money into the market. I think we are unofficially in recession. We have seen continuous downward turn, and this downward turn has come across the board, across sectors, whether it is technology. Obviously, there had been a bloodbath in technology. Whether it is retail, whether it is healthcare, all the stocks have shown huge amount of correction. Now, having said that, what I want to do really quickly is to go over 2 or 3 quick points which would help you plan your next 3 or 4 months in the market, which may help you build a little bit of wealth but keep the risks away. Now, obviously, largely there are 2 ways in which you could invest in the market. One obviously is where you take a little bit more risk, which will give you more returns, but it's a little bit of a risky maneuver because the market could still continue to go down, and that would mean you would end up losing a whole bunch of money. That doesn't mean that it cannot come back. It's just that in the near term, you may lose money. The second one is the one which I like the most, is to have a gradual entry into the market and continue to improve your position if you see downward correction into the market over the next 3 or 4 months. Very simple strategy. Whatever money you are making, come what may, keep 70 to 80% of that as cash. Save it for the rainy day. Because in the case the market goes down, something untoward happens, you would have enough cash which will help you drive through and continue to make sure that you are not facing the heat which a downward turn can bring. Number 2 is the 20 or 30% which you keep aside. You should kind of divide it into 3 larger buckets. One would be in lower risky methods such as ETFs. The second one would give you slightly more exposure to track equity. The third one might be something which you can invest in crypto markets. We'll come to that one later. The first one you can put into higher leverage ETFs. For example, TQQ is a very good buy at this point in time. Even though it is leveraged, it actually helps you track the growth which some of the tech companies may have. Now remember, some of the tech companies, such as mostly the payment companies, Netflixes of the world, are actually in a little bit of a problem right now. So unless they figure it out, I will advise you to stay away from payments as well as some of these niche companies such as Netflixes of the world. On the other hand, you could definitely invest in companies which are focusing on core tech such as Google, Facebook, and others. So try to find these ETFs which are tracking these technology stocks such as TQQ, some of those components which are there from Vanguard and others. You see, believe it or not, if you don't have debt, it's very difficult for you to go bankrupt. And keep that principle in mind. Try to create a list of 4 or 5 companies. Don't go overboard building up a list of 20 or 30 companies. Maybe find 4 or 5 companies. Do some research, like for example, look at their PE multiples, look at some of the future investments planned, look at some of the newer releases if they are a product company, if some of the newer releases are around the table and stuff like that. Especially try to see what had been the trend across these. For example, if I take Apple's example, it is the first time I'm seeing at least that Apple has been falling faster than the market. Since its last earnings call, it has fallen down somewhere around 16-17%. Price to earning ratio has seen a huge amount of correction from, I think, 30 or something to 22. I think there will be a correction of a couple more points, and it's a good stock to enter. So similarly, you can make a list of 4 or 5 good companies which have strong fundamentals, good balance sheet. They have plans to make some big announcements and new releases. And it will be important for you to park some of the cash in those companies, because that's a very good way for you to build wealth once these companies again go on the growth trajectory. Now, the most interesting one I've said for the last, and that is cryptocurrencies. Personally, I've not been a big fan of cryptocurrencies because, it had been very difficult for me to understand how these currencies work and how they go up and down. It seems like if you are a whale and you hold a whole bunch of money, you can anytime go out there and become a market maker. And since it's not regulated, I always feel that I'm a little bit more exposed. So I personally do not invest. But I think it's a good time for you to take a little bit of cash, put into some of these high value cryptocurrencies, such as, it's not that there are many, but Bitcoin is the one which I feel is a good one to get into. So I would say the third bucket should be to build a little bit of position in Bitcoin. And I'm specifically talking Bitcoin because I think Bitcoin is the core fulcrum of entire crypto industry. And if that crashes and falls, then I think we will be done for the good. But by the way, I want to go out there with full disclosure that this is not an investment advice. I think this is a good strategy for you to keep yourself safe given the recession gets really aggressive. And this also gives you an opportunity to build up a little bit of a position when the market has been suffering from a bottom trend. And as it continues to correct itself, or say if there is a further bottom or downward movement, you can continue to build a little bit of position in some of these good companies, and that will eventually pay you off. So that was my intention to make this quick video. I think it's important that you be cautious. Don't go overboard and spend too much. The signals are not very good. The inflation is still very high. The commodity prices are still rising. And that would mean that there will be pressure. And as Fed said, that they're not saying that they're not going to increase the rates, but they will go a little bit less aggressive when it comes to monetary policy. So with that, I will end the video. Stay safe, stay healthy, and see you right back again. One more thing I wanted to say is, leave a comment below what you are thinking. What would be a better strategy according to you, to build up a little bit of a position in the market while keeping yourself safe. Would be very interested in hearing your opinion. All right, enough. See you again in the next one. Bye.